Hi guys, hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to IronFX webinars, guys. Can you guys hear me clearly? Okay, you guys can hear me. All right. Shall we just wait for 1 more minute? Sorry, I was having the issue logging in on Zoom just now. Okay. Oh, I was looking at gold just now at the okay, gold has reached all-time high, I think at like 39, 49, and then it was pull back. Okay. I will share with you guys later for my setup. Okay. So today's topic is quite straightforward when we already heard about like price action. I'm personally use a price action to trade gold combined with support and resistance. Okay. I'm gonna show you as well that if you like to trade XUSD, you will spot a lot of price action for confirmation at the key level. Okay, I have that. I'm gonna show you later. Okay, after our end of the webinar. Again, guys, good morning, good afternoon, good evening, wherever you are. Welcome to IronFX webinar. So today we're gonna talk about price action masterclass. And disclaimer first, all right. This information is not considered as an investment advice or an investment recommendation, but instead a marketing communication and risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. This product may not be suitable for everyone, and you should ensure that you understand the risk involved. Okay. So myself, my name is Peggy. I'm investment analyst and prop trader. I think some of you guys had like heard about prop trader or proprietary trader. So basically, I need to pass all the challenge. Okay, I take like 2-step challenge, step 1, step 2, and I need to follow the rules. And after that, if you pass all the challenge, they will give you the capital to manage. But of course, you need to pay for the challenge. Mean you purchase after you pass, and then within a month or 30 days, or some of the profit made 2 ways. If you can trade and make a profit, you will get a profit split would be 80-20 or 75-25. And after that, they will also give you the refund, which is the amount that you pay for the challenge. Okay. They have the daily drawdown would be like 5%, and max drawdown is 10%. Okay, so you have to pass that. And if you pass, they will give you the capital, and then you trade one day on the firm capital, not the client capital. Okay. And so I trade from the firm capital, and also I trade for my personal as well. Okay, so the agenda for today, basically, what is price action trading, core principle of price action, key price action strategies, multi-time frame analysis, and trade management. So what is price action, guys? Anybody know what is price action? We already see from here. So they say the price action trading is methodology that analyze historical and current price movement to make a trading decision without relying on traditional technical indicator. So if you were to look at my chart right now, I would say that based on the key level and the price action, okay, I don't have too much indicator. The indicator that I'm using, that will be the RSI to identify the divergence or bought oversold. There's nothing wrong if you want to trade with the like a lot of indicator. because there are so many traders, they trade with like indicator or their own EA, okay, but I personally prefer to trade with like the empty chart, and then I read the candlestick pattern, or those like PA or price action stand for price action. Okay, you will see here I can explain why I buy at this level, why I sell at this level. So whenever you trade, right there, you should have the question or ask yourself, if you want to sell here, what is the reason, or you want to buy here, what is the reasons. Okay, so don't trade with emotional. Okay, they will say that core concept price action trader believe that price tells the complete story of market sentiment, supply, demand, or support resistance dynamic and future potential movement. Key philosophy, they will say that price is the ultimate indicator, everything else is just a noise. Price action reflect the collective psychology of all market participants, their fear, greed, and expectation. Okay, so what is price action in trading? There were no advantages. They will say that no lagging indicator. You know that if you are using indicator, we have the lagging indicator, forward indicator. I'm not so sure about that. The indicator you should use like to forecast quite exact one is Fibonacci. If you want to use those like EMA crossover or MACD crossover, I think I consider that is a lagging indicator, meaning that whenever they cross, you might miss a good entry already. But if you look at the price action, you'll get the entry like very early one in the lower time frame with at when price at the key level. Okay, work in all market conditions. Ranging market in gold. Today early in Asia section, I saw price action, so that I bought at 3,900. Price could not close below. I'll show you guys later. Provide real-time market insight, applicable to all time frames. Focuses on market psychology, but their challenges is that require experience to master. Subjective interpretation can be overwhelming internationally. No mechanical signal, demand emotional discipline. Here, I know that just now I was having another webinars. I tell them that my buy zone would be from 52 to 45, somewhere around here. This is the Fibonacci extension, okay? And sell here because there is a price action at the zones. I tell them you sell 49, your take profit would be at this level. At this level, I am at this level, right? This is your TP. Your TP from this TP, this is gonna be your buy entry. So we sell and then we buy here. Your take profit, first take profit I aim for 49 TP1 and TP2 was at this level, but price went all the way to 47. So back and forth 200 pip. That's the reason why we buy at this level and we sell. Okay, and this morning, back here at this level, okay, price break above. Remember, price was at the, let me use the ICT for the killing, so at least I know the like time zone. Okay, this was the Saturday. Okay, here. Okay, this morning, early morning. So my time zone is UTC plus 8. Okay, so exchange section open from, it was the all-time high here at like 90. No, it was all-time high at 96. Remember, it's 96 New York, right? From here, you can see a pullback a little bit from 96 again to all the way to 92. Okay, from that, if price have broken above here, right? And this was at the extension 127.20 and price is falling. from this level, okay, if you were to look, I'm gonna remove this one. I'm gonna come back to this later, but since I'm already here. Price had falling, and you can see that the body did not close below 3,900. Okay, from here it was ranging. Okay, so price you sell TP, you buy up from this level because 3,900 is psychological number, right? Anything that ending with 0 or ending with 5. From here, you will see your price action confirmation at the this candle. And price go back up here, and you can say that you take profit because from this level could be someone who are selling, right? These are selling. They close below, they was ranging here, close below, all the way ranging, kind of close below 3,009. Rising again from here with someone sell. But if you hold to hold from here, you can hold, right? After that, you highlight the box. This is the zone. Price has closed above the box. Okay. I think would be this this yeah. It's what ranging, and this is your price action. Whenever you see the ranging market, you need to draw the box from the body, not the wick. Then you will see that price has rejected 39.06, and from this candle, it indicates that price has broken out of the range and pull back. So we buy here from 39.06. If you buy here, you can hold. Second buy is right here, and then you would aim for the first one, ATH all-time high, and price have make the BOS break of structures, and another BOS pullback, and this is another break of structures. That's the reason why we buy here. Okay, this is the high, this is the high, this is the low. This low puts the price, make a break of structures. This is the extension, and somewhere close to 39.50 you sell here. There's also price action here, right? This is a bullish engulfing candle. Resistance, it becomes the support. I was having another webinars. They will say that they dare not to buy here, ask them to buy. They say the gold is really crazy now today, like since last week or 2 weeks ago. Yeah, so I think it's best you can stay out of gold until they announce the NAP, because it's supposed to be last week, right? And US has the they have the shutdown, right? That's why the data are still on hold. Okay, so now, oh, okay. Core principle of price action, did I say already? No, okay. They say price reflect everything. We already know that all fundamental and technical factors are already reflected in the price. Price is the ultimate truth. Market psychology drive price. Price movement are driven by human emotion, fear, greed, hope, and despair. Support and resistance are key. So price tend to respect certain level where buying and selling pressure equilibrate. Okay, so the first thing what you need to do, you need to know how to identify correct support and resistance or demand and supply. Whenever price approach a key level or at a key level, you will see the price action. 99% I will see the price action at the key support and key resistance level. They will say that trend is your friend is true, right? Because gold is on uptrend. The reason why I buy, you should know that whenever price make the higher high, higher low, higher high, higher low, this is the break of structure. Whenever price pull back, usually they cannot go below this high, or they cannot break below this low. If they break below, meaning that it's going to be the chain of character, price pullback, and then we're going to sell. So the market going to change like that. Okay. right? High. If they break below this one, chain of character, pull back, make a low, make a higher low, lower low, lower high, lower low, lower high. Okay, and then it might be like ranging. And then continue to make a low high. Or price have make all-time high, you will see the price was ranging and continue to go all-time high, which is here, right? You see that whenever they make all-time high, it was ranging in the M5 or M15 right here, and then they have pulled back. You can see that it pulled back 2 p.m. the zone that we buy at 23, and then it rising, make another all-time high, right? Break of structure, pull back, and now it's at the it's falling from 30, 36 from 47 is 100 pip, give you another 100 pip again from this level to this level. So basically now they go falling, okay, 100 pip, that is very easily. But last time it was like 2-3 years ago, go like, you know, falling 30 and 50 pip, that's quite like I mean, go falling like 100 pip, quite challenging already. But nowadays, you can just see within 5-minute candle, you can just see price falling. So I think nowadays, it's quite difficult to trade if you compare with 3 years ago. I would say 3 or 4 years ago. Oh, okay. The trend is your friend. Price pattern repeat. Yeah, you will can see that they keep repeating. Human psychology is repetitive, leading to occurring price pattern and market behavior. Okay, now this is really basic. If last week you attend the webinar, you will know already how to read the candle. Because price action requires you to know how to read the candle. Okay, bullish, we know that opening here, closing here, highest, and the lower price. Bearish is from the resistance, the opening here, because we want to sell, right? Opening price, and this closing price, lower and the highest. We should know that by now, all right? Okay. Now, this is the, why I see the drawing. Okay, we have the hammer. Okay, so basically the hammer is the bullish reversal candlestick that appear at the end of the downtrend. So we call it the price action because we know that this is really have the buying pressure, push the price all the way up, right? You see that, and on top there's no wick, meaning that no seller who want to sell at this price. Everybody want to buy. So whenever you see this one, okay, that you can open at the next candle. Basically, either you wait for the pullback or you just buy at the open the next candle. So you have really small body on top and the long wick or have the long rejection. Okay, and morning star. So morning star, it happened at the support level. So basically they say that 3 candle pattern consisting of a red candle followed by a small body and a large green candle, suggesting a possible shift from downtrend to an uptrend. But sometimes guys, this one doesn't mean have to be red. Sometimes it's green, but you will see like very small body. Okay, so I consider that a morning star as well. Engulfing, we see that a lot because if you trade with ICT or SMC, whenever you see the engulfing candle, they will draw this one at the bullish of the block at the support level. Engulfing, we have two types of engulfing. We have bullish engulfing candle, which is at the support, and bearish engulfing candle. So basically, a green candle that completely engulfed the previous red candle indicating a strong buying pressure. Okay. Another one, shooting star. Okay. We seen this quite a lot. Of course, shooting star you will see at the resistance level. Okay, you will see the small body with a long upper wick here, right? Upper shoulder indicate a potential reversal from the uptrend. So basically, this is a bullish, right? Whenever you see that, then you see that they're going to changing from bullish to bearish. Bearish engulfing, I already see that. Tell you that we have the bullish just now. And it had to be the red candle, okay, completely engulf the previous green candle. Okay, so whenever here for the SMC or smart money, they'll identify this one as the bearish OB or bearish or the block. Okay, evening star gonna happen at the resistance level. They will say that a three candle pattern consisting of the green candle followed by a small body and the large red candle starting a potential shift from an uptrend to a downtrend. Sometimes again, it doesn't have to be red. Sometimes it could be green. Whenever I see green, I will consider the evening star. But the condition is all those price action or PA to me stands for price action have to happen where you need to see that at the key level. Okay, meaning that support and resistance level. Okay. Oh, okay, that's gonna be that is all for today, guys. Now we're gonna look at the price action together. I know there's so many price action, but this is the one I'm looking. I always see. For example, here, this one, evening star, right? It happened at the resistance. I would say this is a resistance level, and this is psychological number, which is where 39.50. Okay, this level is I saw the divergence as well. Okay, the divergence in the M15, and this one I remove in H4 time frame. Okay, this one was the this is a projection from 52. Okay, and the extension was 45. 45 seen here, price falling, I already sell and go back up again within the zone here. Okay, go back to the lower time frame, which is M5. Right now, seen here 45 sell, falling buy, and now price go back up within the zone. Now within the zone here, you will see the price action. That is your confirmation. You will see this your price action here. Correct, this is your price action. That's why you sell. This is how you sell, right? This is M5. So whenever price, okay, you have marked the zone from 46 to 52 is about how many pip? More than 6, let's say 60 pip. So you need to wait for price to go in the zone and then show you the confirmation. In this case, we see the price action here, right? You see the price action here and then you sell. Another one, you are going to read the candle based on the M15 candle. You will see that the closing here, this is a closing, right? This is the opening. You look at the opening candle here. This is no wick, meaning that everybody willing to buy at 39.41 or 40. You can see there's no wick, meaning that nobody want to sell. They just put the price up. Okay, all the way to the all-time high here. And the M15 candle, this is the closing, this is the opening. So everybody puts the price down, closing here. The deck candle opening same at 39.47. So everybody willing to sell now. Nobody want to buy at this level. Put the price up, cannot close above the ATH, which is all-time high. Put the price down here, closing with kind of like, you look at the body here. You look from this high to this low, right? The wick, this is the body, is closing more than 50% of the candle. What does it mean? It means that this very strong selling pressure, right? The next candle, they're still selling off, right? You see the rejection, and you will get the sell where, see here, there's your price action, and then you sell, boom. Then we buy up here, go back up again. If you have confidence, you can sell, okay? Usually I will play buy, sell, buy, TP here, and that's it. I did not buy, I did not sell again. Okay, because gold is really unpredictable. Right? Okay. And the another one, I will show you the price action. Remember that they said that price action can seen any time frame. Okay, here. Example here, we also have this was ranging market. It was ranging here. Okay. This one ranging market, right? Ranging, price close above and pull back, you buy. This was then you will say that, oh, but I think this, can I consider that this is the bearish engulfing, bearish engulf? Yes, bearish engulfing here, right? But you have to take note that based on market structure, I'm gonna move somewhere here. Okay, this is quite risky. Okay, if we're gonna look here, we say that, okay, they are making the break of structure here, right? BOS. Now they make the equal high from here, and then it seems like they make like kind of like going to be M pattern, and then if price pull back here, we're gonna sell. We're gonna sell at this neckline. Yes, you're right. Okay, I'm gonna sell here. If you put the Fibonacci, that will be 50% Fib level, right? So price went up. Okay, we sell. Then you see the price action. This one, they will say that, okay, I sell here. That was the rejection, price falling from 58 to 52. 58 to 52 by right, you close. But before they break above from this level, you go down to the low time frame, you will see that M15 have rejection at 50%. You have the rejection and price was ranging already. Whenever you see ranging market, you need to be aware they might break above or break below. So whenever you see the ranging market, what you need to do, either you sell here, you already close at least more than 50 pip, you withdraw the box, right? This is gonna be the ranging box for you. They will see that price have closed above. If you to sell here, you need to put the stop loss slightly above the box, you will get stop out. Of course you say that, okay, I can take risk, and then you can sell. Here, ranging market, you see that there's a price action happen at the upper box, at the resistance, so you can sell. So whenever price in middle of the box, we're not gonna do anything. We're gonna buy here, or you're gonna sell here, or you're gonna buy here, right? Correct? You see that is your price action. You can just see that this is with strong selling pressure, right? Strong selling, and then you can see the body is so tiny, right? From here, you sell. You sell at the upper, you take profit, the body is not close below 38.53, break above from the, if you still sell, you will get stop out. So this is the ranging. And you look at the lower time frame, I go back here again. Traditional trader, those like who trade with those like chart pattern, doesn't mean that chart pattern not work out. It work right from here. It respect the neckline here. This is the resistance level, or we see that this is the M pattern, equal high, price broken below this support level, pull back, resistance, yes. Okay. Keep in mind that this is the low, higher high, higher low, higher high, higher low, higher high. Could be this side lower, higher low. But to me, it's quite risky here. Okay, let's say, but it is strong price action as well, right? From here, you will get the sell, then you sell up to this level. Now, go to the M15. Even at M5, it already tell you that price break out of the range from here, right? So what you need to do, if you still sell, you need to get out. Then you need to look for the buy entry. But where you're going to buy, you need to wait for price to pull back, either from this level, or let me go M30 or H1. Okay, now we go to H1 time frame. This is already create the demand zone here. Demand zone here, demand zone here. Price might pull back to this zone again, and then we can buy. Let's see, they're gonna pull back. I already forgot this. Okay, right? Pull back. You can stop out. Pull back to these zones. Pull back to this zone, which is on the H1. Okay, one of the things in H1 time frame, you need to wait for H1 to close. Now we go to H1. Remember, I said there's a demand. Another one also have like a demand here, right? And below here, we have the bullish engulfing candle, which is here. So if we want to buy here or buy here, in the low time frame, do you see the price action? Okay, I only see the rejection. I will go to the lower time frame. Okay. On the low time frame, we don't see the chart, we don't see the price action, but we see the chart pattern, head and shoulder, right? The condition is that, remember, they have body close above. This is the left head, and pull back to make the right shoulder. Okay. Price has rejected almost 78.6% and continue to rise here. And this is the zone where from 37 and 40. So basically, if you want to make the zone, so you make the zone from anything from 40 to 50, 35, that's going to be the zones, right? Any with 5 or 0, and then you can go one time frame higher, M5. This is how M5 look like. Whenever you go to M5, what do you see? You see the bear bullish engulfing candle is here. Okay. But price did not come to the bullish engulf, and then they continue to rise and have the rejected here, sideways. This is a sideways. M5. Sideways, right? You see that? Price close and now pull back within the box. Now, if you want to sell like that, where your stop loss, guys? Your stop loss is this level. This is or you can put at this week. Okay. Because sometimes price may just respect the, pullback to the box. Sometimes they will just go to the body. And then from here, you can see that whenever they break, pull back, and now they continue to rise. Another all-time high. Okay, go on a higher time frame. Now it's right here, right? Like rising here. And then the zones that I'm looking will be this OB here, above that. From here, they make the break-up structure, right? This is the bearish OB. That's why from here, the first time price come. Remember, when you trade with the OB or order block, we're gonna trade when it's fresh. First time come, pull back from first here to the low, 2,300 pip. Okay, so if you trade one lot, you would have earned 2.3K. First time, second time coming, I'm not consider if you want to sell here, I will see. Right, price go back up again, and this one ending with belly and gap. So this zone is gonna be your demand. So there's gonna be someone is gonna buy this level. Right, boom, and make another break of structures from this one and continue to go higher. Now this zone, they also create the demand zone here. There will be someone want to buy, but price did not come, right? Did come? No. This is a lower time frame. So this zone is gonna be, if you want to buy, you can buy at 3,009. Actually, in the lower time frame, when it pull back, you will get to buy at this level, right? You can see the M5 of ranging pullback M5. Right now, from there, they are selling off 32. So if you were to sell again at 46, you hold, or you sell at 42 here, they're falling to 32, so about 100 pip. Where you will see the rejection, they really come another box here. This is a demand. First time come rising, now come to the fully OB here, now it's rising. Any question? Do we see the price action here? We don't see the price action, we see the rejection. Okay. You see that rejection so strong. I think right now it look like the ranging to me. In they might be the ranging now within this box. Okay, in M5. This one price action I already told you guys. Yeah. Yeah. Oh, sorry, here. Do you have another price action? Here. Over here. Okay. What about the higher time frame? Of course, higher time frame is easy to spot, which is here. Price closing with very bullish and break above, pull back. Price action here. The price action here. This is lovely price action here. This is what? This is a morning star. Right, this morning star rising, morning is rising, evening is gonna be on top. Okay, evening, so sunset basically. This is the bullet and gulf. You will get the sell here from 34.21 all the way to 0.3. That's about, let's just say 200 pip. Almost 200 pip. Done, right? Which is here. This is price action. This is price action happen where? At the support level. Let's say I put this my support, but due to key level, we just put this as support level. But when I saw the wick, I'm gonna highlight this, gonna be my zones of support level, right? You can see that price come in the box here. You see the price action, right? It is H4. But what if before they are forming the PA or price action in the lower time frame, on the lower time frame, what do you see? In M5, you will see the price action, but still haven't go in the box. Okay, price make the price action, right? I go to the higher time frame. You see I make an equal low price action here. So from here, you were to buy at 15, price rising to 17. Okay, go down. Now break. Go back. You will see the price action go in the zone. This is not in the zone, so therefore you see that like rejection sometimes give you a few pip and price falling. So if you want to buy and like if you want to buy without or confirmation, you can have like smaller size, because sometimes if price go in the box because the zone is big. If you wait for confirmation, you need to be patient. You will get the entry here at the 1.3, right? 1.3, you see the price action with M15. Go back up again. Now you buy here 12, 16, 40 pip. Go high here 17 if you did not close the ending with gap here. You need to go on a higher time frame to look. Now this is risky because still within a zone, but price was ranging in this zone, right? And after that they decided to close. Sometimes you cannot look at one time frame. You need to look multi-time frame, like lower. Then after that, you need to go on a higher time frame to see how the candle react. And after that, you will see that price closing with Boolean gap, and it closed above this level, right? You can see that. You go to M15, you'll see that this was the resistance from here to here, right? You can see that rejection, close, a pullback, rising. Now we go to H4. H4 ending with price action. Okay, guys, do you see that? Here. And then we'll continue to go price high. Okay. Any question now? You guys can request. Do you have any instrument you want me to have a look for you? Can we consider in H1 this is my price action? My eye is very dry, guys. I don't know why this is. Can we say this is a price action? Not really, right? Based on this. The opening and closing almost the same, but there's a buying pressure push the price closing at the 42, opening at 42, like the same, like buy sale somewhere here, but it seems like that it's still buying here. Wait, somebody guy, can you send anyone? Okay. Sorry, just can you please show how you use Fibonacci extension on smaller time frame? Any time frame, okay, any time frame is the same, basically you need to identify where is the high. This is Fibonacci extension we use whenever, or we want to forecast if price broke above this resistance level. I mean broke the ATH, all right, this high, the recent high. You need to pull pivot from the swing high, the recent high, to the recent low, right? And then this is your Fibonacci extension. Commonly used, we have 127, 161, and then add in the 200, and the next one will be 261.8. Okay, this in H1 time frame. On the low time frame, you can draw at the M15, right? Meaning, let's say here. From here, it is very obvious that this is a high, this is the low. So if price break above this high, then you need to use the extension, right? Or what about the low? Hang on, I'm gonna find in the lower time frame. Okay, here. Let's see, let's say here. This is the high, this is the low. Price, okay, make the high. Oh, if price break below this low, the swing low to the swing high. Now, this is a Fibonacci extension. Price had rejected from or close above the 127, 261.8. You can see that. So this is how we use whenever price either break above the resistance if the price close below this support, where is the next support level. Okay. Like here. Right? This is the starting point 100%. Ending point is 0, 100% here. Price broke below from this to extension 161.8 from this part. Wait, okay. When shall we use Fibonacci extension and Fibonacci retracement, and will these two projections make a difference in the bigger time frame and the shorter time frame? Yes. Okay, we use Fibonacci extension to forecast. One is profit taking. Okay. Fibonacci extension, right? Fifth, I will just say fifth extension. We have for fifth extension. For profit taking, they are taking the 127.20. You could say that TP1 and 161.8. 161.8%. This for profit taking for the buy entry or for the sell entry. In this case, for gold, for the buy entry, TP1, TP2, and this Fibonacci extension, you also can use to forecast the resistance level, meaning that whenever price make a new high or break above the recent high, and then on your left, there is no resistance, there's no nothing, then you need to use the Fibonacci extension to forecast for the next potential resistance level. meaning that go back to H4, right? Here. Price have broken this level. I don't know why the next resistance level. What I can do, I can use the Fibonacci extension. TP1 here, people who close. Price did not respect 161.8, but did respect 200%. From here, you can see that you sell off, right? This is the either you buy here, you close here for the TP1 or TP2. But in this case, it's not respect, but it respect 200% extension. This one price have broken above. It respect, first respect what 127, meaning that people who buy from here, 127.2 that is TP1, they close. That's why you can see kind of like the pullback rejection a little bit. In the low time frame, you will see that you can sell, right? From here, you see that in the M15, you will see that you will sell at least 100 pip, 200 pip, right? From that, go back and break above, respect the 261.8, we sell. Now, price go back up a little bit. They are make the divergence in the M15, right? So this the profit taking one, okay, and also acting at the resistance level in this case, okay. For the support, okay, same. And Fibonacci retracement is more for the pullback. You wait for pullback and then you buy. In this case, you will sell. This is the high, this is the low, okay? Now, price rising, right here, react to 61.8 and then pull back. In this case, they are acting at the resistance level. You wait for the pullback, okay? And another one for the buy entry. Here, this is the low, this is the high, right? You need to pull from your red to the right. Price had reacted off or closed somewhere close to where 50%, 61.8, and then you buy. Of course, in this level, there may be a light or close to, in this case, resistance level or support level or somewhere around here. Okay, but they did not come to 61.8, they just react almost, right? Almost close to 61.8% Fibonacci. So low, high, pull back and continue. Okay. This one as well. Like here. From here, this is swing low, this is the swing high here. Price has small pullback because very strong uptrend. Pullback at where? 78.6, 38.2% here. Then you see the rejection and continue. Pull back and continue to go higher. Make a break of structures. Break of structure here. Right? From now, from this low to this high. This low to this high. Or 61.8%, 38.2%, which is same from this swing low to the swing high, 38.2%. Do you see that? Because whenever there is a very strong trend, price usually will pull back 38.2 here, right? And from this high to this low, price also have the pullback 78.6%. Okay. Is why okay, is volatile stock like Tesla or some momentum IPO stock soften respect the feeble both external level? I never try. Okay, let me I can Tesla. This one, Nasdaq. Look here. I look at the D1 time frame. Yeah, I think Fibonacci retracement extension is work well with all assets. Okay, from this high to this low. This is how many percent? I think 61.8% Fibonacci retracement. Almost, right? Almost at 61, but we're at the 50%. So whenever you do the zones, right? This is gonna be your zone. Whenever you see like that, okay, in D1 time frame. Either you say that this is your resistance level, this is my resistance level, and this is my zone. Meaning that here, if price rising from this zone, I see the confirmation. And of course, slightly here, you see kind of like the OB here, the zone there. So if price go to the zone here, we're gonna sell. Okay, from this is the support level. Okay. And the next one either would be the neckline here for the first or the neck resistance level, or this is the another resistance level. Let's see. Okay, price had respect before the bounce off. Okay, here. From the Tesla, the D1 time frame, right? From here, you should already buy April because you will see the what is price action. You could see like triple low. Right, triple low here. Price have break above the neckline. It was ranging in D1 time frame or like neckline here. Right, it was somewhere here. Correct? And this body close above. It was ranging. Okay, and look like the bill pattern or the triple low or triple bottom. 1, 2, 3. Break and rising. Can I use the extension? So if price had broken from this high to this low, okay, first could be 161.8 or 200%. Let's just post that okay, 200%, you can see the zone. You can see this is the zone. We have Fibonacci confluence, we have 50%, we have 200%, and we in the zone, we have the supply zone. Here, block here, price falling to where? To the support level. This is the support level, okay? Why? The resistance, pull back support level, you see in rising. Now, whenever price respect the support level is broken here, it's gonna break above first resistance to go to the next resistance level. So if this is done, this Fibonacci extension is done, okay? This is done because this is gonna be my new high. Interested if price break above this high, the next resistance is gonna be my second resistance level. We have somewhere 61.8% fib. You can see that. Respect one more time. Okay, now it was ranging, right? From the support level to the resistance, now it ranging again. Okay, ranging market. Then what you need to do? We need to wait. It was ranging, buy, sell, break, right? Now it break. Why I forecasted it's going to break? Because price have broken this resistance, pull back. Okay, and you need to look at market structure. This is already make the chain of character here. Because if price going to continue to go bearish, they should make the lower low, lower high, right? Lower low, lower high, equal low. I go back here, equal high, come right here and make a higher high chain of character, pull back to the neckline here and before ranging. Now it's break above first resistance here, they make the chain of character, not chain of character, break of structure. This is your BOS. Okay, break of structure. From this resistance, it become your pullback for support, and from here, they're rising. So the next one, I would say that this swing high resistance level. Right? And now they break. Now it's right here. So now, price might pull back. I'm gonna highlight the zone. Now, from this, price also make the pattern. This is the consider chart pattern here, right? And then they break. They might pull back to the support level. If this is gonna be my retracement, 30.2%, and maybe at 30.2% here and the pullback. So this one I'm gonna remove because price has the go above already. From this, I'm gonna pull here again. 200% reacted off, right? The next one, this is all-time high. Yeah. Oh, wait. Oh, these are okay. The next potential, I'm gonna use the extension. It's here. Or if you want to buy now, you need to wait for the pullback. Okay, guys. I'm gonna put here for the next resistance level. If price break above this all-time high right now for the monthly time frame. It is, yeah. Okay. D1 is gonna look like that. So if price pull back, you may buy at this level. Okay. This is for all for today, guys. Thank you so much for joining the webinar. I will catch up with you guys again next Monday. Okay, so if you have time, please come and join the webinar and learn together. All right. You're welcome. I hope to see you guys again next week. All right. Happy trading, guys. Take note of this high impact news for the NFP. Okay, bye for now. Take care. Bye bye. You're welcome.